It's a big week on a lot of fronts. Let's start with the CPI numbers that came out. They certainly got the market's attention. What did you make of those CPI numbers? Are they as encouraging as some people seem to think?
I think they were good. They were good numbers, but one number is never decisive, and there were a lot of special factors in these numbers, some of which will be reversed. Particular, as always, Team Transitory only focuses on the things that are likely to come down in the future, not the things that are likely to go up in the future. I don't think apparel prices will keep going down so fast. I don't think we've really got structural disinflation in medical care. But this was a good number, and the market was right to respond positively. Whether the magnitude of the reaction was right, I think that's very much in question. There was another number yesterday, which was the Atlanta Fed number on wages, and that was showing continued strong wage inflation. And I don't see a way, as long as inflation is running in the 5-6 range, that we're getting to target. So I think the people who declared victory on the basis of this number yesterday were overreacting. But look, it certainly was an encouraging number. But we had similar encouraging numbers in March and similar encouraging numbers in July. And one swallow didn't make a spring then. And so I think we've got to do what Jay Powell has said he's going to do, which is be vigilant and integrate all the data looking forward.
And that was my question, actually. We know how the markets reacted. The question is, how will the Fed react? We have a little time till that December meeting. At the same time, given what you've seen so far, it can change. Do you think that the Fed should be varying its path one iota? Some people are now saying instead of 75, it should be 50, for example, in December.
Well, I think the market's been expecting 50 for some time as the most likely case, and I don't see a reason to change from that expectation. I don't think you can make judgments based on a single month's data. There was a very substantial adjustment in markets' expectations of what the Fed would do, and I wonder whether that a change quite that large of more than one full move, one full 25 basis point move, was warranted on the basis of just this number. But it may well prove to be appropriate given what we see in the future.
Larry, how much more difficult are the markets making the Fed's job? Because the financial conditions loosened dramatically in response to those CPI numbers, the most since March of 2020 when they announced $2 trillion in fiscal stimulus.
You have to look at both the Fed funds rate and at the overall level of financial conditions. To some extent, I think these financial conditions indices are misleading, because when the stock market goes up, they call that an improvement in financial conditions, but it may just be a change towards more optimism about the economy. So I'm not that taken with the financial conditions indices like the ones that come out of Goldman Sachs that give significant weight to the stock market or to credit spreads in the overall assessment, because I think in some sense they're not just reflecting what the Fed does, they're reflecting changing views about the economy.
Larry, arguably the other big news this week with the midterm elections, which, by the way, aren't really fully finalized yet because we don't know the results, including who controls the House and the Senate. But at this point in the process, what do you make of these midterms? So one thing I learned was, once again, that people don't pay that much attention to pollsters or, by the way, the media.
David, look, I'm quite encouraged. The center is holding. If you look at people on the extreme of either party, they actually underperformed quite badly. There was more ticket splitting as people voted for one Democrat and one Republican, rejecting the more radical candidates. The swing towards Democrats came from independents and came from more Republicans voting Democratic. I think the reaction to the radical Supreme Court decision was actually a substantial part of this story. That's probably cautionary for Democrats, because it's not always going to be that way. But look, we're not having people in the streets fighting over the results of elections. Candidates who lose, even very radical candidates who lose, are conceding. I think this was an election that suggested some movement back towards the center of the country holding.
What message do you think the White House should take away from this, particularly with respect to economic policy? Is this time for a mid-course correction? Are there some lessons in here for the White House? And by the way, should they even take a look at who's on the economic team? Is it time to revamp that?
I think they've got very good people. I don't think the people are the issue. It's a very experienced team. Inevitably, over time, administrations have turnover. Look, I think the country is governed best when it's governed from the center and governed with moderation. Nobody's going back to $3.5 trillion new deals. It's not on the table, and I think it's appropriate, given inflation, that nothing like that be on the table. I think there's a lot we can do to bring down the price of energy by promoting energy production of all kinds, renewable and non-renewable. I think there's a lot that the administration can do and will do with respect to technology, particularly in the semiconductor area. It's a big challenge to actually build infrastructure out well in a way that's going to contribute to reducing bottlenecks in our economy. I would like to see more partnership between business and government. And frankly, if we're going to build out the necessary energy infrastructure around the world, I don't think there's any alternative. So I think that the administration has a real opportunity now to move to an implementation phase.
Laurie, one other big development, globally at least this week, was the next climate summit in COP27 over in Sharm el-Sheikh. Are we making progress on the climate or not? It seems sometimes like they just get together and talk.
Yeah, yes, I agree with that. But David, I think more is happening in the laboratory and less is happening in the conference room. The good news is that tremendous progress is being made in all sorts of technologies that point towards renewable energy. There are some really exciting developments with respect to batteries and storage that enables renewables because it's not always windy or sunny. So I think, ironically, even though there's less political progress than one would have hoped, I actually think we're in a better place with respect to the problem than one might have expected a decade ago because of the progress in technology.
And finally, Larry, can't leave this week without talking about Sam Bankman-Fried and FTX and that meltdown in the crypto exchange. Apart from the details of what exactly happened, what does it tell us about the need for regulation, and why don't we have regulation? We've been talking about it forever, Democrats and Republicans. How pressing is that need? How can we get it done?
You know, David, a lot of people have compared this to Lehman. I would compare it to Enron. The smartest guys in the room, not just financial error, but certainly from the reports, whiffs of fraud, stadium namings very early in a company's history, vast explosion of wealth that nobody quite understands where it comes from. I think the regulatory community ought to draw two lessons from this. One, if we had a few fewer economists and quants and a few more forensic accountants running around, I think it would help us detect what was going on in countries and in companies. The more I watch, the more that field of forensic accounting seems to me important. And the other is, I think we ought to have a rule in everything that touches finance, that everyone who has anything to do with it in a position of responsibility has to be entirely away from the office, away from their phone, away from any device and connection to the system for a week or two continuously each year. And I suspect that that would be very helpful in causing some of these problems to come to light sooner. But absolutely. But I think this is probably less about the complexities of the nuances of the rules of crypto regulation and more about some very basic financial principles that go back to financial scandals that took place in ancient Rome.